Hello investors and traders, and welcome to the weekly market report with the market guys. I'm AJ Monty. This is a one-year daily candle chart of the volatility index, ticker symbol VIX. And as I do each and every week, I've left my lines on the chart so you can see how the prices have been tracking our forecasts. And last week what I did is I drew this diagonal line for the VIX, putting a price target right around 12.5. But I mentioned that this was going to be an elongated trend forecast going out 2 weeks. So we're just about a third of the way on this, and I think that there's still a good chance that we'll see that price target hit at 12.5 on the VIX. But the interesting thing is, over the past week that we've just had, the VIX has gone up. Now, keep in mind, the VIX is inversely related to the S&P. So if the VIX has gone up this week, you would think the S&P would have pulled back, right? Well, think again. What's happened is, if we look at the spiders, SPY, you'll see that the spiders, which is again the representation of the S&P 500 index, continued to rally. Now, we pulled back just a little bit in line with my forecast from last week, but we have a long stretch of green candles right here. This is highly unusual that we see this. Now, this is also a confusing signal because we have 1, 2, 3, 4, 5, 6, 7, 8, 9 green candles in a row, which is tied for the record of the longest stretch of green candles in a few years. And the volume today, being the 12th, increased, especially towards the close. So what does that tell us? Well, the increase in volume tells us that the buyers are still in force. But the VIX, as we just saw, is rallying, which suggests that the S&P could pull back. So we have two opposing forces here working against each other when they should be working, again, inversely, but equally. And now this, again, throws a wrench into our forecast because even though the VIX is going up, I'm still going to forecast that we can go up just a little bit next week on the spiders before pulling back. So I'm keeping in line with the pullback to the 20-period moving average. I'm keeping this in place. I'm going to erase this, and mainly because we have that long stretch of green candles known as a stale green light. Okay, now let's take a look at the Russell 2000, which is a more broad-based index. We had a good forecast on this one where I said we would pull back. We did that Monday, Tuesday, and Wednesday. We came within pennies right here of my target price. By the way, when I draw a diagonal line like that, the end of the line becomes the target. And so we had a target at 15.49. We came to that precisely, and then we bounced. But as we bounced, we rallied through this resistance area. So what's going to happen now is this resistance is now going to act as support. And this long shadow above that candle tells us that the sellers are starting to move in. So I'm going to forecast that the more broad-based index here in the Russell 2000 is going to start to pull back next week. Okay, looking at the diamonds, again, very confusing signals. We have a long stretch. The direction at which we're moving right now is almost vertical. As you can see, we gapped up today. This is most definitely the Trump effect. The tax plan is working precisely as the president said it would. We have companies like Walmart and many others giving their employees raises and bonuses, and this trickle-down effect will eventually stimulate or continue to stimulate the economy. Now, don't get me wrong. I am still very, very cautious on this market because all it takes is one outside event or news shock to put this market right back into a free fall. So you have to be very careful because people are so optimistic they're not really paying attention to what could happen on the downside. So again, I think the diamonds is going to pull back. We have a long stretch from this 20-period moving average. I'll delete this line. I'm just carrying it over. I think the pullback will eventually take place. we have a divergence that is quite wide. If you talk about the rubber band effect, we say that if you take one end of the rubber band, connect it to the moving average with the other end of the rubber band connected to price, the rubber band is stretched. And in the past, the market has stretched just to about that distance before pulling back. And we're again stretched almost at the same distance as it was back here in early December. Okay, so now the Qs, that's the NASDAQ market basically, pulled back just a little bit Monday, Tuesday, Wednesday, and then it bounced again, more or less in sympathy, like the domino effect in the rest of the markets. So I'm going to erase this line right here. I still think that we could rally just a little bit. This is really very similar to what I said in the spires. So I think we could go up a little bit more before pulling back. So that's the forecast for the Qs. Now, we have a very special event coming up on January 25th that I'd like to tell you about. Just go to the Market Guys Facebook page and you can scroll down and there's a link right down here that's going to bring you to managing risk in the cryptocurrency market. Whether you've decided to trade or invest in Bitcoins or not, it's important that you at least familiarize yourself with what's going on in the cryptocurrency market. Just as a disclosure, I am not investing in Bitcoins, nor am I investing in the cryptocurrency market, but I am seeing many people taking excessive risk. So I thought it was only best for me to talk about risk management principles to ground everyone and maybe pull them away from the hype that we're hearing about so that people aren't, and I've heard this before, leveraging their homes. Believe it or not, people are taking loans against their homes and mortgages to get into the Bitcoin market. Big, big mistake. I will be talking about that market and what it means and how to manage the risk. So all you have to do is click on that link. It'll bring you to a registration page, and then you could save your seat with TradeStation. It's a free event. It doesn't cost anything. It's at 4:30 on January 25th Eastern Time. I look forward to speaking with you then. Until then, have a great long weekend. By the way, the markets are closed on Monday for Martin Luther King Day, so don't accidentally go into the office if you don't have to, and definitely don't try to put any trades in on Monday because they won't execute. All right, have a good weekend, folks. So long.
This video segment is a small part of what the Market Guys offer through their educational products and services. If you are interested in any of our Trade Alert services, or you would like more information about our one-on-one mentoring program, simply contact us at info@themarketguys.com.